Sasuke, hope we're live. And we're live. Welcome back to another edition of the pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live at PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we place in your hand each and every trading day. Welcome to Take Back Friday, which is so far in full effect. Yeah, Take Back Friday, for those that are uninitiated, that's normally when, if a market's been up all week, you can expect a little pullback on profit taking. Likewise, if a market has been down all week, you can expect a little bit of bump, a little bit of rally for profit taking as people are getting out of the market. People like to have a little thing that jingles in their pocket. So, got to take those coins out of the market, man. That's what you do. You take them out of the market. So you can expect that today will be pretty much a Take Back Friday. So that's what it is. Let me see here. I'm getting myself together. Give me just a quick moment. While I'm getting myself together, I want to remind you that today is going to be the live webinar with my man Frank at 11 a.m. Eastern Standard Time, New York time. You're definitely not going to want to miss it if you are a crypto trader. All right, you definitely want to get that. Okay. So it is what it is. You don't want to miss it. He's going to talk about everything that I talked about as far as managing open positions and legging in and pop method revisited, all that stuff we're going to be going over. All right. So you definitely don't want to miss that. Okay. And that is 11 a.m. All right. So let me see here. Let me see here where we are. All right. Oh, also, now, if you missed last night's end of day report, remember you can go back and you can view it. Thursday night end of day reports are very important because I give you the intraday price inflection points for today. All right. And I do it for all the markets, for the cryptos, for the forex, for the futures, for equities, all that good stuff. So you can know where the line of demarcation is in the sand. All right. Oh yeah, the webinar is I believe that is for PulseWave subscribers only, for those that subscribe to the report only. I do believe. Frank, if you're listening, you can correct me if I'm wrong. But if you go to PulseWaveTrading.com, I'm sure it's posted there and you can get all the information about it. Just go to the website, PulseWaveTrading.com. I know you do have to register for it. So all the details, all the, the gory details will be there for you to take a look at. All right. Also, bear in mind the rally and crash alerts coming into today. All right. You're going to really want to pay attention to those. All right. If anything gets triggered, anything gets on and popping, you're definitely going to want to be taking note of it. All right. Don't get yourself twisted up and caught up and jammed up in these markets. Do what you need to do. Handle your business. All right. Full disclosure, I am out of the gold. Gold did pull back. I decided to go ahead and pop my way through the trade, and I moved my stop and I got out. So I am done. I'm flat. I rode that puppy all the way up, and that was a really nice one, man. That's what I'm talking about. All right, so first things first, the overnight market looks like this. The Dow was down 79 points at 27,207. You got the NASDAQ 100 down 42.5 points at 11,219 and a quarter. The S&P 500 down 13.5 at 3330 and 3/4. You got the Russell My Hustle down 4.2 points at 1540.3. You got the mighty Bitcoin Futures Composite Index at 11,920, down 120 right now. You got Nat Gas up a nickel, trading at $2.22, right near the highs of the session. It did pull back to 214. looked like it was threatening to pull back lower, and then it just reversed and just rallied. So nat gas is on and popping. Crude oil is trading at $41.60 a barrel, down 35 cents. The long bond is up 3/32, trading at 182.11. That's 182 and 11/32. Gold futures down $4.80, trading at $2,064.50 an ounce after topping out at $2,089.20. I do believe that the market's going to just chill today, and then when Monday comes around, then we're going to get that rocket. I think we're definitely going to not touch, but we are going to go into the 2100 range. We might even hit 2150 by next Friday. We'll see what the market has in store for us. Silver up 6 cents at $28.46 after topping out this morning at $29.91. It should be noted that silver has dropped from $29.91 all the way down to $27.67 in the overnight market. Can you say ouch? That's more than a $2 pull back. That's 10 grand for one long futures contract. For one futures if you bought at the top, you had to experience a $10,000 decline. Can you say ouch? That's what you call total face rippage, total carnage. That's what happens when you get in late. You can't wait and get in at the end of a move. The risk is always far greater when you get in at the end of a move. I'm just saying. So it's better when the trade alerts come across. You got to take advantage of them at that point. All right, let's see here. I got a question. Hey, Dex, will you post the recording of the webinar as here in Aussie? It is on at 1 a.m. and it's way past beauty sleep. Yeah, the webinars that we do, we will repost those webinars. Frank normally does. Well, we record all of them anyway, and then we repost them. If they're private and only for members only, then it gets posted to your dashboard when you log in. When you go to the website and log into your dashboard, it's there waiting for you. Those that are open to the public, where you have to still sign up to attend the webinar, those are recorded and posted immediately on YouTube. So all you gotta do is just log into YouTube and you'll be able to watch it there. So yes, we got your back, man. We always looking out for our Aussie brethren. We got you. There's a U.S. dollar index is trying to say, yo, I put that bottom in. I heard what you said last night, Dex. And yeah, we putting that bottom in, yo. U.S. dollar index is up a whopping 58 pips at 93.37. Got out of that 92 handle. And it's we're at the highs of the session, ladies and gentlemen. And we just put in a new high. Now we're at 93.38 and rising. The euro dollar is down a whopping 91 pips at 117.94. Canadian dollar doing exactly what I warned you it was going to do. Hopefully you were paying attention. Canadian dollar is down a whopping 40. Something that's messed with you. I was saying if you was paying attention. Canadian dollar is up 53 pips at 133.63. Coming into the trading session today, the Canadian dollar had what? A rally alert. That's right. Go ahead and say it with me. Rally alert on this one, and it is producing upside production, pulse waving positive at this moment. Trying to put in that short-term bottom as well. Looking at the euro yen, it's off 75 pips at 124.59. Dollar yen up 14 pips at 105.68. And the Kiwi is down 61 pips at 66.26. Looking at food. Soybeans off a quarter point at 877 and 3/4. Corn unchanged at 323 and 3/4, and wheat is down 1 3/4 points at 499.50. Looks like the rally alert on the corn we had from the other day not really producing at the moment, just kind of stuck in gear. So I don't know if it's going to be able to break out of this. We still got a few more days left in the rally alert until we get another signal, but chances are it could reverse. And maybe the market's not ready. Maybe the bears saw that as a sign of weakness when we got that little pop, and they went ahead and shorted that. We will see, though. That's the thing with the alerts. They can leave the market 3 to 5 days out. So we'll just have to be patient and wait on that for those of you that are cornaholics and like to trade corn. So basically coming into today, we had the rally alert in the Canadian dollar, and we had the crash alert in nat gas, crash alert in crude oil, and the crash alert in the Russell My Hustle. All right, so far, the Russell My Hustle is pulse waving negative and giving us production on that downside. The crude oil did start pulse waving negative as well and giving us downside production. And we have nat gas, which has not started pulse waving negative yet, so no downside production on that crash alert. But definitely we are having upside production in the Canadian dollar from that rally alert. All right, so what does this leave us? Well, it leaves us in a couple of little things, little tidbits of things to talk about. Today was the really big payroll number. All right, so everybody's geeking over that. They're saying, "What do you know about that?" Donald J. Trump, our commander-in-chief, was right. He said, expect a big payroll number, and that's what happened. With analysts and trader expectations about today's payrolls report fluctuating wildly, with some expecting a sizable drop after this week's disappointing ADP report and ISM employment components, not to mention rolling over high-frequency date, while others hoping the recent trend in payoffs increases continue after President Trump tried to stroke optimism, saying to expect a big number. They were like, oh, he's a liar. Well, moments ago at 8:30 a.m. Eastern Standard New York Time today, the BLS reported that in the end, the good news won out, with the U.S. economy adding 1.763 million. Which is above the 1.48 million estimate, was still well below June's record of 4.8 million. Now, keep in mind, all right, this is not creating new jobs. Remember, you lost, all right? You can't have creation when you lost, all right? So you have 50 million people plus that lost their jobs. So now, out of that, ones that lost, some of those were permanent, some of those were just my brain just went blank. Furloughed. So they're now told to come back. So for those that were basically furloughed, they got a chance to come back. And here's how a little tricky it gets too, because those that were fired and not furloughed, right? The company still needs bodies to maintain its day-to-day operations, so they get to rehire people, and they rehire these people back at much lower salaries. So it makes it seem like, oh, new jobs have been created. New jobs have not been created. You eliminated X amount of jobs, and now you have just replaced some of those that you eliminated. That is not new job creation. Cut it out. I hate the way they lie with words and play word games and mind games. All right, so with more people returning to work, especially lower paid workers, as we just mentioned, the average hourly earnings declined once again, shrinking to 4.8% year over year from 4.9% last month, if well above the 4.2 expectation. Again, like I told you, they fire a bunch of people and then they rehire a bunch of people. Normally, if let's say a company lay off 1,000 people, they'll only rehire maybe 250 of those people back. All right, or if they have to, then they'll rehire 500, which is half the amount of people. All right, and then they'll pay them, half of what the people they fired was getting paid. So you'll have one person doing the work of 2 or even 3 people. It just depends on the situation, but most of the time that's how it is. And the people that are hired are happy to have a job, so they'll do the bone crushing work of 2 and 3 people and get paid less to do it. It's just a little trick of the trade. It's just how it is, called the employment game. Now, the unemployment rate also continued to slide from 11.1% last month. It declined to just 10.2% in July, well below the 10.6% expected. Again, you're still in double digits, man. When you were just bragging that the unemployment rate was like 2-3%. Now you're in double digits. And really it's worse than that because you're playing mathematical gymnastics, not wanting to give it up. But that's where we are right now. That's why you see what's up. But, these things come with unintended consequences. All right. Now, in your wallet and in your portfolio, you're like, hey, I'm loving life. But if the market never goes down, doesn't that mean the system is doomed? Because the reliance on good news narratives dooms our financial system and our economy to a death spiral once reality finally breaks through the induced euphoria. Markets that never go down aren't markets. They're signaling mechanisms of the powers that be. Markets are fundamentally clearinghouses of information on price, demand, sentiment, expectations, and so on. Factual data on supply and demand, shipping costs, cost of credit, etc. Reflections of trader and consumer emotions and psychology. If markets are never allowed to go down, the information clearinghouse has been effectively shut down. Whatever information leaks out has been edited to fit the prevailing narrative, which is at this moment, the central banks will never let markets go down ever again. So jump in and ride the guaranteed bull market to easy gains. Now, the past 12 years offer us an ample evidence for this narrative. Every dip draws a near instantaneous monetary policy response that reverses the dip and gooses markets even higher. Remember, I was saying every time the market was having a red day, Donald J. Trump would come out and make a quick announcement. It didn't matter what he talked about. He could say, hey, guess what? My kitten just had puppies. Isn't that supernatural? Because cats can't have puppies. Everyone would be like, oh, that's so spiritual. Let's buy some stocks. And then the stock market will go up. Now, that permanent monetary interventionalist mindset distorts markets. It doesn't matter who the participants are. Who cares if the markets have become markets? All right? Real market, fake market, paper market. They are now nothing but signaling mechanisms that all is well, so buy, 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 like Jim Cramer says. Buy, 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 buy. They know nothing. If gains are essentially guaranteed, then who cares that markets are no longer information clearinghouses? Who cares if it's turned into a casino? Who cares? Who cares if it's rigged? You just want to make money. You want to make money the honest way. You'd really rather be in there banging it out with the trades. But if the government's just giving you money and all you got to do is just throw a dart, just take the Wall Street Journal, open it up, you know what I'm saying, stick it to the wall, and then step back 10 paces and start throwing darts at it. And wherever the dart lands, that's the stock you buy for the day. And then you make, 10 baggers every day. Then people go say, who cares? I'm making this money. But to us real, traders, us old school, us puritists, we want to make it honest. We want to trade it. We want to get in there and bang it out. We want to make it the right way, not just have it given to us. If you're guaranteed to make profit on every single trade you do, where's the fun in that? Indeed. There's no reason to care until the fatal spiral downward surprises everybody, like the NASDAQ bubble bursting in 2000. Here's an analogy of what happens when real information gets edited to fit a convenient narrative. Unfortunately, the patient has cancer, which is starting to metastasize. In other words, it's spreading to other organs in the body. But unbeknownst to the patient, this accurate information is considered bad news. So the test results and other information is carefully edited to show the cancer is actually shrinking, the exact opposite of what the actual facts reflect. Now, the patient is naturally delighted with this false data because it appears he's on the mend and doesn't need any surgery or other drastic treatments such as the poison that they pump into your veins that is killing good cells and tissue, and it's destroying all of that while it's supposed to be killing the bad cancer cells and tissue. But it's killing the whole person. So if participants don't have information that reflects actual conditions, they cannot help but make disastrous decisions, like buying companies that are in bankruptcy. Robinhood traders. Falsified or heavily edited information is misleading. And so all decisions made on the assumption this information is accurate will be fatally skewed. Now, see, it's legal for the government to lie to you, but it's illegal for anyone else to lie to you. Symptoms of the fatal spread of the disease are masked by stimulants. They not only mask their spread, but give the patient a sense of euphoric power and supreme confidence. Now, imagine the patient's terrible dismay when symptoms break through the euphoria and they learn that their cancer is now terminal. Increasing the tragedy is his awareness that had the authorities in charge of his care given him the real world data instead of the carefully edited happy story version, treatments could have been undertaken that might, maybe, perhaps, peradventure, have extended his life. Now those options have been lost forever. That's the situation in our economy and our financial system. The information cleared in markets has been suppressed, distorted, edited for at minimum 12 long years of permanent and ever increasing monetary interventions as the doses of intervention required to maintain the cocaine like euphoria and supreme confidence in central bank manipulation of markets. So they always signal the good news of guaranteed gains ratchets higher on every intrusion of reality. The reliance on good news narratives dooms our financial system and economy to a death spiral once reality breaks through the induced euphoria. Our last chance to clear the financial cancers eating away at our economy are slipping away forever, masked by the market's cocaine-like euphoria and supreme confidence in central banks' guaranteed gains. If the stock market is never allowed to go down, this is the equivalent of telling the cancer-riddled patient that their cancer has disappeared, even as the disease is leading inexorably to the patient's needless demise. Ladies and gentlemen, if that doesn't wake you up and make you think twice, I don't know what will. You know, heeding advice and information is supposed to be done before crisis, not after crisis. So where's all this leading to? See, if you think you can just do, stupid things and no one's gonna do anything about it, well, every action has a reaction. So it's no wonder that Russia and China are de-dollarizing everything that they do. They're saying dump the dollar and we're going with something else. Now, last year, data released by the PBOC and the Russian Central Bank, it shone a light on a disturbing, at least for the U.S., trend as the Trump administration ratcheted up sanctions pressure on Russia and China. Both countries and their central banks have substantially diversified their foreign currency reserves, dumping dollars and buying up gold in each other's currencies. Back in September, the PBOC and the RCB were building their reserves of gold bullion and levels not seen in years. The Russian central bank became one of the world's largest buyers of bullion last year, at least among the world's central banks at the time. And if you took a look at the gold reserves and gold holdings and the global reserves and treasury holdings, you would have saw that that gold was just going parabolic. We've been writing about the implementing of the demise of the greenbacks for years now, and of course, we're not alone. The author states that some well-regarded economists have theorized that the fall of the greenback could be a good thing for humanity. It could open the door to a multi-currency basket, or better yet, a global current Bitcoin, perhaps. By allowing us to transition to a global monetary system with less endemic instability. Though to be sure, the greenback is hardly the first global currency. Okay, reserve currency status does not last forever. All right, it doesn't. Back in the late 1400s, it was Portugal. In the 1500s, you had Spain. In the 1700s, you had the Netherlands, and about around 1750 or so, you had France, and then in the early 1900s, you had Britain, and now it's the U.S. dollar. Okay. Now, falling confidence in the greenback has been masked by the Fed's aggressive buying, as central bankers in the building now fear that the asset bubbles they've blown are big enough to harm the real economy. So we must wait for exactly the right time to let the air out of these bubbles so they don't ruin people's lives and upset the global economic apple cart. Too late, as the coronavirus outbreak has taught us, that time may never come. But all the while, Russia and China have been quietly weaning off the US dollar and instead using rubles and yuan to settle transnational trade. Now, since we live in a world where commerce is directed by the whims of the free market, at least in theory, the Kremlin can just make Russian and Chinese companies substitute yuan and rubles for dollars with the flip of a switch. As Russian President Vladimir Putin once exclaimed, the U.S.'s aggressive sanctions policy risks destroying the dollar's reserve status by forcing more companies from Russia and China to search for alternatives to transacting in dollars. If for no other reason than to keep costs down, international economic sanctions can make moving money abroad difficult. In 2019, Putin gleefully revealed that Russia had reduced the dollar holdings of its central bank by $101 billion, cutting the total in half. And according to new data from the Russian Central Bank and Federal Customs Service, the dollar's share of bilateral trade between Russia and China fell below 50% for the first time in modern history. Businesses only use the greenback for roughly 46% of settlements between the two countries. Over the same period, the euro constituted an all-time high of 30%, while other national currencies accounted for 24%, also a new high. As one expert told the Nikkei Asian Review, it's just the latest sign that Russia and China are forming a de-dollarization alliance to diminish the economic heft of Washington's sanction powers and its de facto control of SWIFT, the primary interbank messaging service via which banks move money from country to country. The shift is happening much more quickly than the U.S. probably expected. As recently as 2015, more than 90% of bilateral trade between China and Russia was conducted in dollars. Alex Maslow, director of the Institute of Far Eastern Studies at the Russian Academy of Science, told the Nikkei Asian Review that the Russia-China de-dollarization was approaching a breakthrough moment that could alleviate the relationship to a de facto alliance. Isn't that something? The collaboration between Russia and China in the financial sphere tells us that they're finally finding the parameters for a new alliance with each other. Many expected that this would be a military alliance or a trading alliance, but now the alliance is moving more in the banking and financial direction, and that is what can guarantee independence for both countries. Again, we're talking about everyone turning their back on the US dollar. This is a big deal because both Russia and China are superpowers. Now, de-dollarization has been a priority for Russia and China since 2014, back during the Obama administration, when they began expanding economic cooperation following Moscow's estrangement from the West over an annexation of Crimea. Now, replacing the dollar in trade settlements became a necessity to sidestep U.S. sanctions against Russia. Any wire transaction that takes place in the world involving U.S. dollars is at some point cleared through a U.S. bank, explained Dmitry Dolgin, ING Bank's chief economist for Russia. That means that the U.S. government can tell that bank to freeze certain transactions. The process gained further momentum after the Donald Trump administration imposed tariffs on hundreds of billions of dollars worth of Chinese goods, whereas previously Moscow had taken the initiative of de-dollarization. Beijing came to view it as critical as well. Only very recently did the Chinese state and major economic entities begin to feel that they might end up in a similar situation as our Russian counterparts, being the target of the sanctions and potentially even getting shut out of the SWIFT system, said Zhang Jing, a research fellow at the Center for Russian Studies at Shanghai's East China Normal University. At times, Russia has polarized use of the yuan over its own currency in the hopes that this would push Beijing to become more assertive in establishing the yuan as the international currency. While the yuan was added to a IMF basket of reserve currencies a few years back, Beijing's unwillingness to take its hand off the wheel when it comes to managing the currency has stymied its internationalization. Russia's push to accumulate yuan is not just about diversifying its foreign exchange reserves. Maslow also wants to encourage Beijing to become more assertive in challenging Washington's global economic leadership. Russia has a considerably more decisive position toward the United States than China does, Maslow stated. Russia is used to fighting. It does not hold negotiations. One way for Russia to make China's position more decisive, more willing to fight, is to show that it supports Beijing in the financial sphere. Now, 6 years have passed between Russia and China opened the FX swap lines between their central banks in 2014. That 3-year deal was expanded in 2017. While trying to assess the long-term risk, remember, Ray Dalio has apparently assigned a whole team of publicists to help spread his concerns about the potential fallout from a U.S.-China capital war. It's worth remembering that China has far more financial firepower to which to vex the U.S. than many pundits are willing to acknowledge. Ladies and gentlemen, at some point, if this does not stop, it is going to wind up ending with nuclear warheads, at least 5 of them probably, aimed toward the East Coast, and you receive a breaking news saying that nuclear warheads have been spotted coming to the United States, to the East Coast. American people in the East Coast only have moments to brace themselves and prepare. That's what this is going to end up with, just so you know. And when and if that day does come, and it's looking like that is going to be inevitable as long as this keeps up, that will be the end of the U.S. as a world superpower, because if you take out the East Coast, remember the East Coast represents Capitol Hill and Wall Street. Take those away, you have nothing. So with that being said, people, the time though, finally wake up and take the blinders off is now. It's now. It's today. Not tomorrow, today. The time to wake up is today. I don't know what it's going to take for most people to wake up. I believe that most people probably will not wake up until it is much too late. And by that time, it's done. The time to prepare and do what you need to do is now, not later, not when it's already happening to you. All right, my man in the live, Michael. Yeah, I see it, man, because gold is pulling back, man. Gold just took out the overnight low. We're now at the 2055 handle. This is why the pop method is important. The pop method is important. All right. You're starting to pulse wave negative now on the intraday price inflection points in a big way. If you're a long GLDLF, you probably will want to seriously start thinking about taking profits and getting the heck out of the way because the market is falling. All right. See, that's why I always recommend people subscribing to the PulseWave price trigger reports, because not only do you get the rally and crash alerts, but you get the education and the information that you need that is listed in the reports on what to look out for. And also you get to learn our proprietary trade managing system and how to do that. All right. Like right now, gold is 100% pulse waving negative on the day. We are now experiencing Black Friday. So not Black Friday, Take Back Friday in the gold market, or should I say precious metals, period. Gold and silver pulling back hard body karate right now. If you did not do what you needed to do and handle your business, I don't know what to tell you, man. Take Back Friday is in full effect. Full effect. So this is what it is, you guys. This is what it is. All right. We need to talk about a few other things. A few other things here we need to deal with. Let's see here. All right, we're going to end it with this today. We've been talking about unintended consequences this week. This has been pretty much the theme of the week, unintended consequences. All right, so we know that gold has no role in portfolio of wealthy clients, said the chief investment officer of Goldman Sachs Private Wealth Management in the week that gold in US dollars went up by over $100 and made a new high of $1,984 before topping out today at $2,089.20. Many found this statement puzzling, as another Goldman department previously had told clients not to sell anything gold. The CIA went on to say the CIO went on to say, our view is that gold is only appropriate if you have a very strong view that the US dollar is going to be rebased. We don't have that view. How can you not have that view when the dollar is pulled back from being over par to being woefully under par, hitting the 92 handle? That is an 8-point pullback. What are you talking about? That's an 800-point pullback. 800 pips. What are you talking about? Do you not know what you're saying? You allowed the dollar to pull back on you 1,300 pips when the dollar was well over 103. You allowed that in your portfolio? You could talk to your clients with a straight face? With a straight face? Really? All right, fine. So you let gold run up to almost $2,100 an ounce on you when you didn't profit not a dime from that. And then today you're letting Take Back Friday erase all of your gains. You let silver pull back on you almost $3 this morning. Is that what you call portfolio management? You ought to be slapped until the taste out of your mouth is disappeared. Your tongue should be on the floor. Let's talk about this imploding dollar. Okay, so we have the US dollar that has lost 85% of its value against gold in this century alone, and 40% since 2018. How can the CIO of the mighty Goldman Sachs say that the dollar is not being rebased? Open your eyes. Where did you go to school? You guys got advanced degrees in mathematics and physics and economics, and some of you got advanced degrees in finance and have taken all those incredibly difficult exams that take days to complete. You got PhDs and master's degrees and all these acronyms after your name. I am a chartered financial analyst, thank you very much. I am a CFA. And you don't know that the dollar's been rebased, you need to go back. You need to give all your degrees back to whatever university you went to. Give them back and sue them for dereliction of duty because they have misled you if you do not understand that the dollar has been debased. History certainly tells us that they're not telling the truth, ladies and gentlemen. People over at Goldman Sachs aren't telling the truth. Or do they believe that the dollar won't go down in coming years as well? Now, as the CIO, Chief Investment Officer, you can clearly they can see what everyone is seeing, namely the prospects for the dollar are doomed with what is happening in the U.S. economy, causing surging deficits and unlimited money printing. The truth clearly lies elsewhere. No asset manager is interested in protecting their clients' assets by investing in the ultimate form of wealth preservation, which of course is physical gold. Gold is money, silver is money, and nothing else. But now we're saying gold is money, silver is money, and so is crypto. The reason is very simple. Goldman's private wealth management, like all other asset managers, are not interested in holding physical gold for their clients for the simple reason that the banks can't earn sufficient revenue on just holding client gold. Instead, they want to put expensive proprietary products on their managed funds into client portfolios and also buy and sell regularly to turn their commissions. All right, that's what they do. That is the Wall Street game. That is why you cannot win playing the Wall Street game. Not the way they have programmed you and conditioned you to play it. You playing the game all wrong. The system is set up to incur these commissions on the client one way or another. They get commissions by putting you into these financial products, or they get commissions on you trading in and out of stocks. All right, it's all about commission. It's not about you making money. It's about commissions. They're not going to teach you how to swing trade. They're not going to teach you how to become a trend follower. They wouldn't make any. They would go bankrupt if they did that. Okay? Just saying. Just saying. And no, I don't think they're going to pass a stimulus bill, at least not right now. The way it's going, I don't think they are. I think they're going to wait. If we have a Black Monday, then yeah, they'll go ahead and they'll pass an emergency stimulus bill, only if the stock market has a Black Monday. Now, instead, asset managers stick to their conventional portfolios of stocks, bonds, and some alternative assets, the Dow gold ratio is now 13, on its way to at least 1-to-1 as in 1980, and probably 0.5 to 1 as was discussed in a previous article. Now you got 100 trillion gold in Weimar Republic. What a 0.5 to 1 Dow gold ratio means in price is impossible to say today. It could be $20,000 gold per ounce and 10,000 Dow. It could also be a $50,000 an ounce gold and a $25,000 Dow. If the hyperinflation takes hold, which is looking like it very will likely be, we could see $100 billion gold. At that point, I would expect the ratio to collapse in line with most stocks and be substantially below the 0.5 to 1 ratio. Now, gold at 100 billion might sound sensational, but remember that the world has seen a lot higher gold in fiat money. Okay? In the Weimar Republic in 1929, gold reached marks 100 trillion. Gold was 100 trillion marks in the Weimar Republic in 1923. Now, by measuring the gold price in worthless paper money obviously serves no purpose, but 100 trillion mark might sound like a lot of money. Well, it is if you have to pay it in actual paper money. But the problem is that paper money at that point has lost its useful function. Today, paper money is gradually being abolished. In Sweden, for example, no one carries or pays with paper money. Even for small amounts like a loaf of bread, a credit card is used. All right, because they want you to be used to using digital money. So as paper money dies, where does that lead us? Well, abolishing paper money has been a planned process by governments and central banks. You need to know that. First, it makes bank runs impossible. The banks will simply just turn off the ATMs. They can obviously also stop electronic transfers. The most important aspect of electronic money is the Big Brother is watching syndrome. Now the state has total electronic control of the citizens' money, not just from a tax point of view, but the state can decide to block individual accounts or to charge fines or taxes without the permission of the account holder. As regards hyperinflation, it is only a matter of time before inflation picks up as the frantic printing accelerates further in line with the collapse in the economy. Now, the current explosion of the Fed's balance sheet combined with surging government debt will increase money supply exponentially. This will also lead to the dollar decline accelerating further. All right? We're talking parabolically, where the dollar is dropping, a full point or two a day. All right? That is a scary proposition. What about the dollar falling and the money supply? We need to talk about that. Okay. The dollar index peaked at 103 in March this year and has since then fallen 10% to 93. And really, it got into the 92 handle. So it's a little bit more than 10%. Now, as the dollar continues to decline, U.S. inflation will pick up. So far, the official U.S. inflation rate is just above 0. Anyone buying food or paying insurance, for example, knows that this is not a true figure. But the real reason why inflation is low in spite of the major increase in money supply is the low velocity of money. All the money printed is not reaching the consumer, but instead staying with banks and other major institutions to shore up their balance sheets. Very little reaches the real economy. All right. Now, if you take a look at the rise in the U.S. money zero maturity stock, the MZM, this is the broadest measure of liquid money. It was 4.3 trillion in 2000, and now it is 21 trillion. 21 trillion. You went from 4.3 trillion to 21 trillion. Only since March of 2020, it has increased by a massive 4 trillion. Just take a moment for that to sink in. 4 trillion. 4 trillion. Every time we talk government, it seems that we have to keep talking about using the word trillion. You notice that, right? Everything is trillion. Everything is trillion. Trillion, trillion, trillion. Trillion this, trillion that, trillion this, trillion that. Everything's a trillion. We used to talk, when we talk government, we used to talk in billions in the 80s. Now it's trillions. If you didn't look at the velocity of the MZM, you see how it reached 3.5 in 1981 when inflation was high and interest rates reached 20%. For those of you that don't know, yes, interest rates used to be in excess of 20% back in the 1980s. And that was if you had good credit. 20% interest rate. Today, the velocity has collapsed to an all-time low of 0.9%. So what are we seeing is that the money printed is not spent but used to prevent the financial system from collapsing. So as the dollar falls, velocity of money will pick up. As the dollar falls and velocity of money increases, we will see inflation increasing rapidly. It's inevitable. Higher inflation will lead to higher interest rates. All right? Those that were alive in the UK back in the 1970s realized that inflation was in the mid to high teens for many years. And if you took out a mortgage, it would have been at least 21% back in 1974. And that's with decent credit. But central banks are today managing to artificially suppress interest rates and in the short term defy the laws of supply and demand. So high demand for credit should in a free market lead to high interest rates and thus taper demand for credit. But in a world controlled and manipulated by central banks, the laws of nature are temporarily set aside. This leads to false markets and false prices. In the likely course of events in the next few years, well, let's take a look at these nightmare scenarios. I've been warning you about that forever. The flawed systems, the flawed models, all right, and the unintended consequences, all right? It's just the way it is, okay? It's just the way it is. All right, question here is, why are gold and silver pulse waving negative if the momentum trigger and sell trigger have not yet been hit? All right, that's a question that is best for the trading room. So I will answer that question in the trading room. But suffice it to say, what I'm basing that off of is the pop method, my friend. The pop method, the intraday pop method. All right, if you review the pop, you'll see what I'm talking about. I was speaking from a purely pop method and the fact that it is Take Back Friday and the market is pulling back heavily. So that's where that was coming from, my man. Just wanted to give it to you like that. All right, and if you look at the loaded joints, excuse me, you'll see that this is already well on its way as well. So I was just trying to point that out to you, that I'm taking a look at the intraday and looking at the pop and how the market has broken down. That's why I always warn that when you're long the precious metals, you have to put your stops in and you have to start popping your way through it. You can't just, like I said the other day, you just can't get in that market and walk away. All right, because the market will get away from you. And those, I've also talked about how gold and silver are thinly traded markets. How do you handle a thinly traded market? Very cautiously. The answer is very cautiously. Okay. So with that being said, if you just looked, like I say, if you look at your advance today, look at the loaded chart. Look at the loaded sheet. You'll see what I'm talking about. The loaded report is pulse waving negative on the loaded report. All right. Both gold and silver are pulse waving negative today. And as far as from a crash alert, we don't have a crash alert. It's just a Take Back Friday thing. So if you were looking at the loaded report, you'd be like, yo, this joint is pulse waving negative for show. But if you're using the regular daily and weekly report, you're right. It's not. It's not pulse waving negative at all. It's just a pullback, which means that I don't expect this to be significant or for the market to stay down. I do not anticipate that gold and silver will start selling off now all of a sudden. This is just a pullback, like I explained about Take Back Fridays. You can expect when the market's been up heavy for there to be a pullback on profit taking. And that's exactly what we're seeing today. We're seeing profit taking. All right. I'm not going to say, oh, there's a top in the market. You're right. If we start post waving negative on the daily and weekly report, then I'll have to say, yeah, that's a top. We got a top. We're nowhere near that. This market would literally just have to actually implode for that to happen. And that's not happening. Even on the Dow, S&P, NASDAQ, even how they're pulling back today, they're not post waving negative either. Not in the reports. They're not. The only one that had a crash alert today was the Russell, and the Russell, yes, is post waving negative, but it has since stopped, and it's now kind of like chilling and reversing. It's the only positive index right now, up 2.4 points. So just wanted to throw that at you too, my man. All right, so where does this leave us, you guys? What is our nightmare scenario that we're facing in the United States? Number one, accelerating deficits and debt. Okay? Unlimited money printing to save banks and failing financial system. Universal basic income introduced in most Western nations. This will lead to ever fewer people working. More printing leads to more currency debasement. Central banks lose control of rates as long end of bond market sells off. Rates reach 5%, then quickly 10%, and on to 15 to 20% minimum. We can expect that at least. All right. Bad debt surge, leading to default, sovereign, corporate, and private debt. Unemployment escalates, leading to more UBI and more money printing. Money printing reaches quadrillions of dollars, leading to hyperinflation. Social unrest, civil wars, cyber wars, and major physical world wars will conflict, and it will be rampant. And this will be all on the back of a falling dollar, along with other currencies, more printing to save the falling companies, even higher subsidies for furloughed and unemployed. UBI means that everyone is paid a basic wage, whether they work or not. Higher unemployment means more money printing. This leads to higher velocity of money, higher inflation. High long rates push short rates up. At 10% rates, interest cost on global debt of $275 trillion would be $27 trillion. $27 trillion is 34% of global GDP, totally unsustainable. So much more money printing required. Banks start falling, including the $1.5 to $2 quadrillion derivative market. The financial system collapses together with major parts of the industry and society. Political systems fail as governments lose control, leading to the big A word, anarchy. This is what you can expect, especially in the West. The world finally wakes up to the fact that it is bankrupt. Obviously, governments and central banks will desperately try to introduce resets, new digital currencies, do a bit of hocus pocus with debt, and pretend it has disappeared. The U.S. might even revalue its alleged stock of 8,000 tons of gold. but their bluff will be called. The effects of any measure governments take will only be temporary as the world realizes that it is really bankrupt. Now, I sincerely hope that all of the above is really a nightmare in the form of a dream and will never take place. Because if it does, the world is back to the dark ages, or the dark years are here, as was talked about back in 2009. Now, the world goes backward 100 years with the above scenarios, ladies and gentlemen. If the world retraces a century of evolution or more, it is clearly in for at least 50 years of very hard times. But except for the initial shock and readjustment, life will go on for most people, but at a different level. Obviously, living standards will decline substantially, and so will the word security. Many of life's treasures are free. The positive aspect is that moral and ethical values will return, with family and friends becoming the kernel of society once again, because they're not now. And many of the best and free things in life will still be there, such as nature, books, music, good conversation, close friendships, etc., with the lack of many of the superficial material values. We will appreciate the real value of the new simple life, even though it will seem a lot harder initially. All right? I'm telling you right now, during all this process, gold assumes its crisis role. Gold and silver are now in the acceleration phase of a secular bull market. As always, there will be corrections along the way to much higher levels. In a period of such severe crisis, which has been talked about here, gold will obviously assume the role it always has, namely as money, and the only money which will maintain its purchasing power and act as insurance and wealth preservation. But remember, it must be physical and stored outside the banking system in a very safe place and jurisdiction. All right, because at that point, it will be meaningless to measure gold in worthless dollars or euros. Instead, think of gold in ounces or grams in purchasing power terms, because that's where it takes us. This scenario is a real scenario, and unfortunately, it is a scenario that is happening right now. All right? I'm just saying. This is what's going on, and this is what's coming. I said it many years ago when I was on the Wide Awake News show with the late great Charlie McGrath, and I was asked the question, what do I expect? I said what's going to happen is the United States is in jeopardy if they don't do something back then to turn it around, and that was back in 2013. I said America is on a course of destruction, and the demise of the United States as a world superpower is going to be multifaceted. I believe that many storms were going to come. I think America's going to be hit by so many storms happening at once that it'll be impossible for it to stand up. It's going to fall down and it won't be able to get back up because there's going to be too many blows. There are too many storms coming. And while these storms are near on the horizon, everyone's at the beach sun tanning, and they don't see the storm, which is only a few miles out. Okay, that's all they. That all they know is I'm sunbathing, I'm partying, we're celebrating when they should be mourning and praying. Right now, people should be praying because I don't think people understand truly what the nightmare scenario is. The nightmare scenario is everything that I just stated to you, but there's a big part that I left out. As all those other factors are happening, guess what is happening along with it? Death, untold death and carnage. Because in scenarios like that, people who are really already, impoverished, they become even more impoverished, even more desperate. A desperate man is the most dangerous man in the world. We're talking about total anarchy and just crime. We're talking about Purge every day, the movie The Purge on a daily basis. No law, no order. We're talking about a catastrophic situation. There was, I was watching a YouTube video the other day. They were talking about, the second wave of COVID this fall. And also they mentioned some neurological disease that affects children. And I thought it was odd because, they've been talking this whole time that the COVID doesn't affect kids. So it's only, the older senior citizens and adults with compromised immune systems that have been, dying, passing away, and kids have been, okay. But like this new thing that's supposedly propping up and coming in there expected in the fall is designed specifically for children. And it's a neurological disease, and it can come on rapidly over the course of hours or a few days. And there's no cure for it. And in most cases, it will lead to the child's permanent disability. Like they'll become like a quadriplegic or something. They'll be totally paralyzed for the rest of their natural lives. And for those that don't go through that extreme, you're looking at the possibility of death. And when I heard that, the first thing it reminded me of that it was the mural at the Denver airport. Remember the children that were laying in the coffins and crying? It was this big old parade of children, and then you had the dude standing there with the sword, and he was looking like a Nazi. He had on a gas mask, you know what I'm saying, and the sword and all that, and he was green. And anyone who knows anything about green, representing like cancer and um, sickness and disease. All right, that's what green represents, disease. All right, and the guy was standing there over them with that sword. So that's representative of a disease being inflicted upon the children. That's why the children were crying. Okay, and they looked, and it was sad because the children were being buried in the coffins. If anyone remembers that mural in the Denver airport, I'm sure they probably took it down or painted over or whatever they did. But yeah, I remember that. And back then, people were trying to figure out what did that mean. Well, now that we're living in the day of COVID, you can see exactly what it means. All right, it means that another disease is gonna hit the people, and it is designed this time to hit the children. All right, so all I can say is, like I said, multifaceted attacks. No country can withstand multifaceted attacks when you're dealing with pandemics and disease, and then you're dealing with war. All right, then you're dealing with civil unrest and anarchy, and then to top it all off, you're having these incredible natural disasters. And then the icing on the cake is when the nukes start falling. You just talk about just there's no way a country can get up from that. The country's bankrupt. It gets hit with the largest earthquakes it's ever had, the most ridiculous storm to make Hurricane Katrina look like a just a regular cloudy rainy day. And then you top that off with all the internal situations, and then you add external situations, and it's all this stuff is happening back to back to back. Yeah, no country can stand that. And this is not the end of the world. See, I'm not talking about the end of the world. I'm talking about the end of the USA as a superpower being forced to bow out gracefully from the world stage. So do not miss what I'm saying. I am not talking about the end of the world, nowhere near it. I'm talking about a scenario that leads to the demise of the USA as a world superpower. Okay? And you're right. It doesn't have to happen, but it is going to happen. It's guaranteed. Some things in life are guaranteed. Guaranteed. One of those things that are guaranteed in life is if Reptile from Mortal Kombat does the get over here move on you and rips your heart out of your chest, you will die. Not maybe die, you will die. All right? And then if he decapitates you after he snatches your heart out of your chest, you will die. There will be nothing that medical can do for you. You've been decapitated and your heart has been ripped out of your chest. You're done. You're done. That's too much trauma. There's a such thing as too much damage, too much trauma. Like a boxer in the ring who's getting beat up. There's only so much punishment, so much trauma his body can take, even though he is in the prime physical shape of his life. There gets to a point where it's too much trauma. Those of you who've worked in ER as doctors and nurses, ER, you have seen there is a situation that you've seen often where a person has come into your unit who has suffered too much trauma and you are unable to save that patient because it has sustained too much trauma. The patient enters the ER with every bone in their body broken. They turn septic. Organs start shutting down. You can get to a point of no return, people. And you're right, some things can be avoided, but it does get to a point where it's an end game at that point. So I'm not talking about the end of the world. I'm talking about the end of the U.S. as a world superpower. I'm talking about the end of the petrodollar as the world reserve currency. That's where I'm getting at. That is what people need to be prepared for. I hope you're ready. That's why I stress every day on this live feed. You need another income stream. You need to be able to get all the supplies and things that you need right now. Because like Jim Rogers always says, if you listen to Jim Rogers, he says there's going to come a time where you won't be able to get food or supplies that you need at any price. At any price. We're talking about not just food shortage, we're talking about supply shortages. Imagine the day that comes when there ain't no cargo coming to the U.S. The U.S. is receiving nothing because the other world superpowers has put embargoes against the U.S. So the U.S. has always put embargoes and things against other countries. But what's going to happen when those sanctions are aimed at the U.S.? Now the U.S. is on sanctions and embargoes. And the UN says no one is allowed to trade with the U.S. They're under an embargo. They're under, UN sanctions and other sanctions. Iran won't trade with you. China won't trade with you. Russia won't trade with you. Where are you going to get your stuff that you need? See, people don't think that can ever happen. But as soon as the petrodollar loses its world reserve currency status, it will happen. I'm just saying. Get prepared, people. I know back in 2013, everybody thought I was a nut. They thought I was crazy. I didn't know what I was talking about. And I was warning you that there was an intensification of inside fighting among the powers that be. And I gave you the scenario of what was happening. And then it started. And you really didn't start to see it come to its full climax until now with the Trump presidency. Now it's visible. But back in 2013, it was not visible. All right? You could not. Okay? So I'm just letting people know what's coming. People get the government they deserve. That's all I'm saying. So prepare for it. With that being said, man, let's end it on a good note. None of the above scenario has happened yet. That means you still have time. You still got time to go to PulseWaveTrading.com and come and break bread with us. Learn how to create a new income stream where you can extract financial benefits from the world markets. Learn how to trade gold and silver. Learn how to trade the cryptocurrencies and Bitcoin. Learn how to trade stocks correctly and forex correctly. Learn what it means to be a trend follower. Learn trend trading, because that's what we do. And we do it better than anyone else. And we have our decade-long track record here on YouTube to prove it. Just interview anyone who is a subscriber here in the live chat. They'll tell you what it is. All right? I want to encourage everybody. You still have time. Nothing. These scenarios haven't happened yet. We're headed down that road, but we're not there yet. So there's time for you to get your house in order. Wouldn't you like to be one of the few people that can even have the wherewithal to get out of the country before they close their borders and suspend international travel, coming or going? See what I'm saying? I'm just saying, man, do what you got to do, man. Handle your business. And remember, at 11 a.m., you got the webinar with my man Frank. He's going to do the cryptocurrency version of what I did earlier this week with the how to manage trades and how to leg into positions and all that stuff. But he's going to be showing you how to do that in the crypto market. Okay. With that being said, I hope everyone has a great and lovely weekend. Take time to defragment, de-stress, man. Relax. Spend time with the spouse and kids, friends and family. Watch some good movies. Kick back. Play some good video games. If you're like me, I'm a Dungeons and Dragons nut. I love Dungeons and Dragons. I play all those type of Dungeons and Dragons type games. That's what I do. I like sports too, but I really like, the D&D titles. I like, Pillars of Eternity and Baldur's Gate are my favorite, bar none. I like the way the role play and I like the real-time turn-based mechanics, and the storylines are awesome. So, and it's you gotta find some type of hobby or something that brings you joy and relaxation so you can decompress. You can't always be business and always be serious. You gotta be chilling sometime. All right. Yeah, man. I know about the Lebanon joint. That's a sad scenario, man, with all the, it's messed up. That's what I'm saying. You got to decompress, man. Don't spend the weekend looking at news and all that stuff. Just your weekend should be for decompressing, because the week has enough going on in it. Period. You don't need to be out there, doing that on the weekend, because then when do you wind down? When do you chill? When do you lean back? And that's what I do. I don't play around, man. I do what I have to do, because if I don't, then I'll be all stressed out and be on all types of blood pressure medicine and all. I don't want all that stuff, man. I can't do it. I don't want to be stressed out. So all I'm saying is, please find some kind of good hobby, that you can do, it brings you enjoyment, whether it's being on the golf course, whatever, man. Just do something. Do something that brings you joy. All right. With that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Remember, there's no end of day report on Fridays. And a take back Friday for crypto markets lasts. All right. Friday lasts until Sunday, 6 p.m. Eastern Standard New York time for crypto markets. So the end of day report that I gave you yesterday of the entry price inflection points, crypto markets have until 6 p.m. Eastern Standard Time, New York, on Sunday to make that happen. All right. With that being said, I'll see you guys back on Monday for the PreMarket PulseScan. Everyone else, I'll see you in the trading room, and I am out. Purge. Smash that like button. You know what it is.